All right, guys, there's no training today because it's a half day. So it's Monday, the 16th of Feb. And I thought I'd just do a quick overview video. I just get the video out there, um, quickly talking about the model. Now, I do talk about my model a lot, but I thought I'd just, you know, get a video out there since there isn't really much we're basically doing today. So the model is a two-step model. It's from a book called The Fib Trading uh, by a lady or dude called Caroline. And my model is just adapted from that. So you need a starting point. That is 9:30. From 9:30, the really the first step in the model is find the direction. Now I do this on the 5 minutes. Yes, you can use other time frames, but I do this on the 5 minutes. So I'm just watching the ES right now. It's really just doing nothing. Now, each step has a condition, actually has multiple conditions, but only one condition has to be met. So, for example, when the direction is determined, the one condition from that is I'm looking at a time box. I want that to happen within a certain period of time, typically 30 minutes. Now you can half that, so it can be 45 minutes, or it can be an hour, etc. Now there are other conditions I have, but only one condition has to be met. Once you've met that condition, then step two is pretty straightforward, which is you're waiting for retracement. So more than one candle, that's why I like the 5 minutes, into a fair value gap. That's it. Now, if you're on a higher time frame, then you're not going to need multiple candles. And once you have that, then it's the third step really is a confluence, right? You're just trying to confirm that price is in the right place. So you're looking for an overlap between the fair value gap and your fib, just the fib level. That is it. Once you have that, the rest is down to experience. So I'm talking your entry, stop loss, and your targeting. Targeting is straightforward because all you're doing is using the same fib and you're measuring the move. So it's a measured move, 100% from the point of the rejection. Your entry is where you find rejection. This is the hardest part. You have to get used to how price rejects off of fair value gaps. This is where you build a lot of muscle memory. So this can happen again on any time frame. So I'm talking 5 minutes or below. I typically look at the 1 minute. So I look at the 1 minute, the 5 minute, and the 50 minute all at the kind of the same time. And the entries, like I said, is fairly straightforward. The stop loss really depends on how big the fair value gap is, what the distance is. So one thing I should mention is your directional distance. The minimum you're looking for is 20 points. If it's less than 20 points, then it's not you just ignore it. Okay. This is again why I like the 5 minutes because, for instance, if you only see two candles of very large candles, you can just ignore that, right? You also want to see a number of candles. So that's really it when it comes to the actual model itself. It's very simple, three steps. The rest is experience. So hopefully you got something out of this video. I will see you in the next video.